Before we get started, just want to give you a little background on myself for those of you who have not met me before. My name, of course, is John Vento. I'm a certified public accountant. I'm also the president of Comprehensive Wealth Management, a New York City-based CPA firm as well that specializes in working with dentists across the country. I'm insurance licensed, I'm securities licensed, pretty much anything investment, tax, accounting related. If it's financial related, I got you covered. Throughout this presentation, I'm going to encourage each of you to take notes. Note down what your question is so that you'll have an opportunity to reach out to me and speak with me about what your particular question was. Please call my office. Contact information is at the bottom of the slide. With that said, we're going to jump to advanced tax planning strategy number 4. And this is a different topic altogether, but nevertheless an important one. The 14-day rental rule. I'm going to read the slide and then explain it to you. So under section 280AG of the Internal Revenue Code, up to 14 days of rental income received by you personally can be tax-free for the rental of your personal residence or vacation home. Be sure not to rent these personal properties more than 14 days. Otherwise, the special rule does not apply. So some of you may have a vacation home, maybe up in the mountains of Colorado. If you're from New York, New Jersey area, maybe out in the Hamptons or the Jersey Shore. If you do have a vacation home, one unknown rule by many people is that if you rent that property out for 14 days or less, any money that you receive, yes, you have to report that on your tax return, but it will be completely income tax free. There are very few places in this in the tax code where I could say you could receive income completely income tax free. Well, this is one of them. So if you are in this position, definitely try to take advantage of this. Give you another example. Had a client in Manhattan who had a very expensive property, and a TV company came across the home and they liked it. They said this would be perfect for the movie that we're going to be filming. So they offered them to rent their home for $20,000 if they could use their home for 10 days. So what they did was they rented out the home. They got to $20,000. They took part of that money, went on a nice trip for almost 2 weeks. The other half of the money they kept and threw it into their savings. When they came in to speak with me, and I went over this with them, and they explained what happened, I gave them some really great news. Being that they rented their home and it was no more than 14 days, the full $20,000 they collected, it was completely income tax free. Tremendous benefit if you fall into the category and you're able to take advantage of it. So let's move to the next slide, which talks about really maximizing the benefit under the 14-day rule. So let's go through it. To double up on this tax break, you can rent these properties to your dental practice for legitimate business purposes, such as employee training meetings, board of director meetings, or employee retreats. Here's the beauty. The rent you paid by your dental practice would be completely tax deductible in the practice, and the rental income you're going to receive will be completely income tax free. So again, in order to take advantage of this, you cannot rent your home or your secondary residence for more than 14 days. So we already know how that rule works. So how does it work if you own your own practice? Well, again, let's assume you have a house up in the mountains of Colorado. We're just using that as an example. And you decide you're going to have a few weekend retreats where you're going to invite down your staff. And you don't have to invite your whole staff. Maybe your administrative people one weekend. Maybe you're going to invite your hygienist another weekend. And you spend 3 days with your staff in this retreat training program, getting to know each other a little better. As long as you're using that property for business purposes, you would have to determine what the fair market rental value of that property would be for each of those days. And then you could write a check out of your practice to yourself personally. Your practice is going to get a tax deduction for that. Again, let's assume you paid yourself $10,000 in rent for the use of your property over this 14-day period, you're getting a $10,000 tax deduction for that, saved you $5,000. But it gets even better than that. The $10,000 you collected personally, report it on your tax return, but under this code section, you're going to then say it's exempt from federal income taxes. Tremendous opportunity. If you could position yourself to do this, I would encourage you to take advantage of it. Again, can't create fictions here. I'm talking about reality. So you can't say you did it if you didn't really do it. You should be able to document what was discussed, have an agenda, handouts, everything that you did on those days with your staff at the retreat, whether it was up in the mountains or even at your home. Be prepared to document it. Documentation is key. The government is not going to just take you at your word. You have to prove that you follow the rules of this code section. So this is the cover of my book, Financial Independence, Getting to Point X. I would highly recommend that you pick up a copy of it. It could be ordered through Amazon.com or Barnes & Noble. The book is loaded with useful financial planning tips. In addition to that, the second version, which is the green covered book, has a new chapter dedicated to dental practices and the specific strategies you could use to save more of what you make. So with that said, once again, thank you for attending the presentation. I'd like to wish each of you the very best of success. Have a great day and enjoy.